Hi, I want to talk to you about two types of trusts. Lee Phillips here. I'm a lawyer. Don't hold that against me, okay? The normal types of trusts that you think of are irrevocable and revocable. Those are the two categories. But within each one of those categories, there's another type of trust. It's called a simple trust or a complex trust. A simple trust is a trust that has to pay all of its income, its profit. I mean, the trust has assets in it. It might be bank accounts or whatever. They get interest. That's profit. In the simple trust, the trust has to pay all of its profit out of the trust so that it doesn't accumulate money. What we're really interested in is where's the tax? So in the simple trust, it passes all of the money down to the beneficiaries, and then the beneficiaries have to pay the tax on it. The opposite in a complex trust. In a complex trust, the trust can actually accumulate money and build the accounts, and everything is within the trust. You like that because if it's an irrevocable trust, which is more likely to be complex than a revocable trust. Usually revocable trusts are simple trusts. But if it's a complex trust, then it accumulates money and it becomes its own taxing entity. If it's irrevocable, it has to have its own tax ID number. Now, it may be simple in that it has to pay everything out each year, and then it has to file a tax return showing that everything is out. A trust's tax return is a 1041. You guys are a 1040. Your trust is a 1041. So, if it pays everything out, it still files a tax return, irrevocable trust, files the tax return, and it just writes 0 all the way down. Don't forget to file a tax return though. If it's accumulating money, then the tax is actually paid by the trust. You don't want the trust to have to pay the tax. And we have a YouTube on taxation of trusts and tax rates in trusts. But the $64 question, the real kicker is your trust at like $12,500 suddenly hits the highest tax rate, 37% under Trumpy. So you're paying the highest tax rate at $12,500 in income. You don't pay that as an individual until you get to hundreds of thousands of dollars, $400,000 type stuff. So you're paying 37%? I don't think so. The last thing you want to do is have your trust accumulate $100,000. So the complex trust allows the trust, it is a trust which is written so that it can accumulate money. A simple trust is written so that it has to pay the money out, and it'll have language in it that says all of the income must be paid out at least annually or quarter annually or whatever it is to the beneficiaries. That's a simple trust. The other trust is the complex trust. It accumulates money, it pays its own taxes. You don't want that. Even if it accumulates the money, make sure that it kicks it all out so that the individual beneficiaries pay the tax at their rate, not the trust tax rate of 37% at $12,500. So, simple trust, complex trust, two types of trusts.